Good afternoon. This is Brian Shannon from Alpha Trends Blogspot. Today is Thursday, June 15th, 2006. The market is just closed, and today was finally a good day for the bulls. Chalk one up for them. If you've been wondering why I've been looking so hard for a bottom the last couple days, it's because of days like today. The Nasdaq was up nearly 3%, semiconductors gained about 4%, and certainly there's been evidence that the buyers have slowly been taking control. If you read what I wrote this morning, I've kind of referenced what I've been talking about the last 2 days, that first we saw the big volatility on Wednesday, and on Tuesday, and that's when, the market was very choppy in there. And I was referencing the point that the sell-off wasn't volatile at all. While the volatility index may have been rising, don't confuse the volatility index with actual volatility in the stocks. That's the way I like to look at it. Tuesday, though, we had very volatile trading, a lot of choppy back and forth action. As that occurred, the volume was pretty big, and we saw yesterday further evidence of that. And as the big volume came into the market without further downside, as I mentioned yesterday, that equals accumulation. And when you have accumulation, that typically leads to a renewed uptrend. And only for the short term here, it's nothing to get overly excited about, but if you were trading from the long side today, it was pretty hard not to make some pretty good money. So what we were looking at on this 10-minute time frame, first of all, was this longer term downtrend. When I say longer term, I'm talking just the last 2 weeks, and the 5-day moving average. Now, initially, what I had mentioned yesterday was that on the hourly time frame, we did have evidence that a turn potentially could be at hand. Now, not all MACD divergences do end up reversing. However, it's been a very good indicator over the last 10 years or so since I've been using it, that when you see a MACD divergence on an hourly time frame, your job is then to drill down to a shorter term time frame, and I like the 10-minute time frame, and as it gets above that green longer term moving average on the 10-minute time frame, that's the time to buy. Now, the system that I kind of put in that MACD video, which is on the website as well, was that your stop would then be under that blue moving average. So you would basically be buying right here, and your stop would be, around 38.10 or so right now. I think that stop is too far away personally, but it is also about the same place where we have that higher low. Now, if we can just go back and take a look at what happened here today, what I was hoping was going to happen was that maybe we were going to experience a strong opening and then a pullback, and then that we would want to buy after that pullback and place our stops under there. That didn't happen. Instead, what we had was a big gap higher, which held, and it held above the 5-day moving average. It held above that declining trend line, and it held above the highs from Tuesday and Wednesday, which is all very bullish. So when we look at this 10-minute time frame, again, let's look down at a 5-minute. We can see our first signs of accumulation right in here when the moving averages started to crisscross. As the red moving average was above the blue, which was above the green, and just think short-term, intermediate, long-term, it said that the short-term trend is above the intermediate-term trend, which is above the long-term trend, which means you don't sell short. Even though the larger-term picture is clearly in a downtrend, it's very sold off, and it's come down to a level where we were looking for a bounce just based on the fact that it was so oversold and the bearishness was really growing out there. So when we look at a 1-minute chart of today's action, let me just make sure we've got 1 day on here. What was kind of interesting is the market ran up above daily R2. That's this level right here. It found support, made another rally, and came back down to R2 later in the day, which was also where the VWAP was. When it holds above that R2 and finds support, typically you're going to see a continuation of the trend, and that's exactly what we saw this afternoon. Now, it was ridiculous. I saw on a big popular finance website that it said, market rallying due to Bear Stearns earnings. Give me a break. It had nothing to do with Bear Stearns earnings. It had everything to do with the fact that the market was deeply oversold. Yesterday, as we noted, the bad news came out at the bottom, and bad news didn't make the market go down. If bad news can't make it go down, what's going to make it go down? And bad news I'm referring to is the CPI number. People were anticipating higher inflationary numbers. That's why the market sold off. Who's left to sell once it's already declined 10% in the last 6 months? As I mentioned this morning, clearly not the sophisticated buyer. That plus the fact that we had this longer term trend line acting as support on a weekly time frame. along with just the general psychology. And read this morning's piece about that psychology because it's very important to understand why we were poised for a move higher. Now, I've been chopped up looking for a move on Tuesday higher. Yesterday was a good day for me, as was today. But the point is here, the market was speaking to us. Forget about what the people on CNBC are saying. Forget about what I'm saying. If what I'm saying doesn't make sense based on what the chart is saying here, then it's just opinion. And a lot of times, my opinion will be wrong if I have an opinion of the market. That's why I like to listen to the message of the market. What is the market telling me? The market is telling me that the buyers took control. It had this nice surge higher, followed by a classic little consolidation. Look at the big volume on this rally, followed by low volume consolidation as it pulled back to the short-term moving average, as it pulled back to the level that was that the VWAP for the day, the level that was daily R2. And then what did we see? We saw exactly what we want to see in an uptrend, a continuation of that move higher on big volume. Now, if we look at the measured move and say, let's just take this and say it's about 37.50 up to 38.20. So if we call this a 70-cent move, and it's probably about a 80-cent move because that looks like about 38.30. If we take 80 cents and add it to this low down here at 38.05, it would give us a target of 38.85. Now, the market didn't hit that 38.85 level, but on a daily time frame, and if we look at the hourly time frame, you can see it not only overtook the 5-day moving average, but also the 10-day moving average. Next target might be where? The 20-day moving average, and that's where it found a little bit of intraday resistance today. So the bottom line is we had a great day in the market today, and a lot of it, was foreseeable. Now, I didn't expect a rally of this magnitude, certainly, but if you're long, all your job once the market starts to rally is to forget about what you think the market should do and instead raise your stops above these higher lows. Maybe you're stopped out midday when the market does nothing and the volume completely dries up, and then to get long again once the buyers retake control and set your stops above these higher lows throughout the day. And that's going to make you more objective and have better results in the market. So altogether, we were looking at yesterday as a constructive day, and today we had follow through. Now, tomorrow's options expiration day, and I don't really have a strong opinion about what the market's going to do. It's coming back up into these levels where there ought to be some resistance. The best thing that could happen, we're looking at the spiders right now, the SPY, is that maybe it starts to chop around and go sideways in here, find some support, and start to rebuild a base. But that's getting a little bit ahead of ourselves. Certainly, though, the shorts got killed today, and good, they deserved it for once, right? And everyone deserves it once in a while. If they overstay their welcome. The longs got, and this is going to sound mean to a lot of people, but the longs deserved what they got all the way down. That's what money management is for, and that's what being a professional in the market is. And I know I'm probably going to get a couple emails and say nobody deserves to lose. You deserve what you put into the market. If you put hard work into the market, you deserve good results. If you blindly just put your money into the market as if it's a casino, you're going to get losses, and you should probably not be in the market unless you're doing the homework, have a good money management plan, and know when to get out. So back to these spiders, the spiders also broke this downtrend line back above that 5-day moving average, and now it's into a level where it ought to find hopefully a little bit of consolidation in here. And I'm going to go back to the Qs one more time just to show you where we are there, that the 38.50 level, we had that one false move into that area. Now, if it can hold above this level, in particular, I think about 38.25, 38.30 or so, then we're going to be in a much better position to continue to rally. But again, I don't think that rally is going to come here. I think what we're going to see is more sideways action. And I think today the easy money was made on this rally. And tomorrow we're probably going to see a little bit more consolidation in here. My name again is Brian Shannon. I may be back later with another idea, another video with some ideas for the market. Depends on what I see when I'm scanning stocks. But thanks for visiting my blog, and enjoy your feedback at alphatrends@gmail.com. Have a great day. Thank you.